Welcome back to the deep dive. Just a quick heads up for everyone listening. We've got some other commitments today, so this Bitcoin briefing is going to be, well, shorter and sharper than usual. We're really just focusing on the absolute critical takeaways you need right now. So the immediate picture. Bitcoin, BTC, it's trading just under $104,000. That's down nearly 4% in the last 24 hours. And that's pulled the total crypto market cap back to around $3.6 trillion.
Yeah, that pullback is pretty significant. Feels like a bit of a critical moment. So our job today is to quickly unpack, what's really driving this dip. And just as importantly, look at the underlying supports that might be counteracting it. What actually caused this sudden move?
Okay, let's unpack that. Our sources are pointing towards, well, significant selling pressure. It seems like it's a mix. You've got veteran long-term holders selling, but also short-term holders kind of panic selling.
It's the scale that's striking here, and maybe the psychology too. The long-term holders, the ones you'd expect to hold tight, they've offloaded, get this, 405,000 BTC in just the last month. That's roughly 2% of the entire supply.
Wait, 2%? From long-term holders? That is dramatic.
It really is. It suggests maybe that some veterans are taking profits, perhaps seeing institutional interests slow down a bit, or trying to front-run a bigger correction.
And I guess that veteran selling just amplifies the panic from others.
Absolutely. And adding fuel to the fire, short-term holders sold about 28,600 BTC at a loss in just the last day. So it's really no surprise the fear and greed index has dipped to its lowest since back in April.
Right. And the basic supply-demand picture isn't helping either, is it? I'm seeing on-chain metrics showing, well, less buyer conviction. Basically, the amount of new Bitcoin mined daily, about 450 coins, that's actually more than what the regulated investment products like ETFs are absorbing right now.
Exactly. So you've got this sort of supply overhang happening. More coins hitting the market than buyers are immediately scooping up through those regulated channels.
Yeah.
And that just amplifies any downward pressure.
Okay, so that brings us to the technicals, this make-or-break zone people are watching.
Yeah, we're testing a really crucial level. It's the $103,000 to $104,518 support zone. Why is it so critical? Because it lines up almost perfectly with the 50-week moving average.
Ah, the 50-week MA. That's always a big one for market health.
It really is. It's kind of the historical check for a bull cycle's health. Analysts are warning, that if we close the week below this average, that would be the first time since 2023. And historically, that often signals, well, the end of a bull run. If this support breaks, forecasts are pointing down toward $92,000 pretty quickly.
And $92,000, isn't that where the CME gap is, that sort of vacuum on the futures charts?
Precisely. It often acts like a magnet, pulling the price towards it to fill that gap. So yes, a critical downside target if support fails.
Okay, so that's the immediate pressure point, the worry. But let's pivot. Part of the deep dive is finding the structural strengths too. Where's the counterbalance? What's providing a floor?
Well, the foundation is still being built, mainly through institutional adoption and clearer regulation. Interestingly, even as Bitcoin struggles, we're seeing some resilience in privacy coins, like Monero, XMR, and Zcash, ZEC.
That's interesting. So maybe a rotation?
Could be. It suggests some investors aren't just fleeing crypto altogether. Maybe they're rotating towards anonymity, perhaps as a hedge against volatility or, increased regulatory focus.
And speaking of regulation, there are positive developments too, right? Like in Hong Kong.
Yes, exactly. Hong Kong recently eased some rules. They're allowing licensed exchanges there to connect with international order books. That's potentially huge for boosting liquidity and growth in the Asian markets.
And the institutional adoption story just keeps rolling, it seems.
It does. Full steam ahead, really. Institutions now hold about 25% of the ETPs, the exchange-traded products. And a huge number, like 85%, are apparently planning further allocations in 2025. You even have major figures like JP Morgan's CEO, who's famously skeptical, now calling crypto real.
That shift is pretty massive, signaling long-term credibility. And it's not just big finance, right? I saw Matador Technologies announce they're boosting their Bitcoin reserves.
That's right. Another public company adding BTC to their corporate treasury strategy. This trend of companies accumulating and holding is important because those coins are effectively taken out of the day-to-day trading supply. It provides another kind of structural floor.
Okay, so pulling it all together.
Yeah, if we synthesize this, what we're seeing is this real tug of war. You've got the short-term pressure, the holder exhaustion, battling against this strong, ongoing, long-term integration, both institutional and regulatory. So until we see buyer conviction really pick back up, a sort of neutral stance seems pretty sensible.
So the final thought for you listening today, this huge influx of traditional finance, holding $50 billion in these regulated products, it definitely cements Bitcoin's status as a serious asset class, no doubt about that. But here's something to maybe chew on. Does this rapid embrace by institutions, this integration into the traditional banking system, does it ultimately challenge Bitcoin's original idea? Its core identity as a decentralized asset, something to consider as we all watch those key support levels this week. We'll be back tomorrow for another deep dive.